Do you have a lot of developers, that do custom integration work or build for Truist?
Not necessarily. So we do have Salesforce, technology team, our client experience team that helps with building out, that our Salesforce interface. But we do have Blend, as our, front end tool for client use, and so we do customize that. I would say pretty considerably, to meet the needs of our business. But other than that, I don't know that there's very much. I don't know. What do you think, Jonesy?
Yeah, I mean, I think you're spot on, Greg. We do our customization in Salesforce. Our Salesforce is our enterprise platform. So we have different lines of business on Salesforce that they customize it to their needs. They brand it something different sometimes, but at the end of the day, it's where we're delivering referrals, cross-channel referrals between mortgage and our other lines of business and vice versa. And then we're constantly working on different ways to modify Salesforce to make that process easier. It is our point of where referrals, it's our point for us pushing marketing leads for outbound contact, things like that. In Salesforce, it's where our connectivity between Empower or as loans are generated in Empower statuses and those sorts of things are pulled into Salesforce for the loan officers to be able to see like their pipelines and statuses. And then also to be able to launch invitations to apply through Blend to our clients. So ultimately what we're working towards is making Salesforce sort of that single pane of glass for our loan officers to use. Okay. Whether it's creating new leads, their new contacts, or receiving leads or status updates, or launching invitations to our clients. And we have long-term technology projects to try to really bring all that together, so it really just becomes that one stop for loan officers. It's an ambitious longer term that we're going to be working towards and kicking off next year. But ultimately, that's what we're trying to get to, and continue to develop to make it as easy as possible for our sales force to navigate, whether it's a marketing component to it for self-marketing, or what I'm describing with doing business through the application.
Okay, all right. So let me start with the focus of the place where the loan originator works on Mortgage Coach every day, and then we'll talk about that, the ability to use it for that front end lead generation and that post-close transaction, and then also leverage Mortgage Coach to help drive increased mortgage products within your depositor base. All right. So with Mortgage Coach, we have changed the way that borrowers receive a quote on rates and interest rate and total cost of ownership. Today, our industry is fraught with something that is so antiquated, and really it was the COVID that brought this to light and has pushed the industry and a lot of industries into the digital world, right? So no longer are we sitting necessarily face to face, we're now delivering a digital experience. And our focus is to partner with lenders and banks and credit unions to help those companies become the preferred mortgage lender in the markets that they serve. You invest heavily in a mortgage infrastructure that includes people, products, resources, technology, and we want to help you maximize and capitalize on that. But we also know that this industry is full of a lot of challenges, right? So today the headlines have got just almost some feelings of panic as we enter into 2022, right? Coming off of 2020, 2021, where we saw our volumes pretty decent. Now we're looking at this purchase transaction market where inflation's going on, we have interest rates rising, we had Fed tapering, we had the CFPB coming in stronger than what it has been in the past several months. And all of that deals with uncertainty. It creates uncertainty, doubt, and fear. And it brings, to the industry a different way to think about this transaction. But the things that I just talked about, all those headlines, all the economic changes and the market changes bring about some very, very common things we see all the time, whether it's in up markets or down markets. There's always the complaint that margins are thin, compliance can be hard. Your loan officer is saying your rates are competitive. You have to have referral sources, feeling that they can trust you to give their valued borrower handed over to you to provide a mortgage transaction or referral. I don't know what your price exceptions are like. Those are all things that we'll dig into. Technology can be confusing, and it sounds like you guys are undertaking a massive opportunity to create automation around this whole process, and that's exciting. So with those challenges, we think that this is fundamentally one of the reasons that you have those challenges. If your loan originators are still using things like a closing cost worksheet, a fee worksheet, or even a loan estimate, or heaven forbid, things like Excel spreadsheets and things you can't control or don't know if they're compliant, this is what establishes in the mind of that borrower a commodity transaction. Because when the borrower asks your loan originator, what's your rate, which you know they will, yes, you'll probably give them at some point, your LOs will deliver a rate, but more importantly, it's getting rate off the table from the primary focus. It's how do you change the conversation to help the borrower or your depositors see that this mortgage transaction is a vehicle to build wealth, to build generational wealth, to build equity that can work for them. So this is the difference. What you see on the left-hand side is status quo. The fee worksheet is dead. It can't survive going forward. I was in did some leadership work this past year on what the requirements are for change in our industry today. And part of it's technology and part of it's people management, but also it's the digital world for which we live. And it's got to be not just using technology, because I think we've over-indexed on throwing technology at borrowers, especially in the banking world where, there's chat boxes and there's automation and all the digital things that you can do with banking. But more importantly, moving forward, you have to have that human element that sits on top of technology. And that's what Mortgage Coach allows your loan originators to do. As an organization, when you're looking at Mortgage Coach, there's also reasons to buy. So it's not just the fact that you're enabling your loan originators, but there are true return on investment areas that you can see with Mortgage Coach. The first is in the area of conversion or pull through. Mortgage Coach, if you're adopting hard in the first 30 days, you'll see a 20% increase pretty fast within your organization. A lot of lenders complain that, especially as we look at getting into the purchase market again, with borrowers fixated on price, you're going to capture the lead and then the lead's going to drop out, right? You'll have fall off. So Mortgage Coach addresses that. The next area is in the opportunity to reduce rate shopping. With Mortgage Coach, because you're changing the conversation from price to advice, you have the ability to stop or reduce rate shopping. And if your loan originators do request a price exception, it'll be a lot less because, again, they're getting closer to the borrower through this value-based experience. And then the ability to increase referrals, right? So if you're handing a realtor, a past client that you had a conversation with, you're doing an annual mortgage review, and you discovered that that borrower is ready to move up or ready to move down, or they want to do an investment property, and you turn that lead over and you work with your realtor partner, that's worth its weight in gold to build and deepen realtor relationships. And then finally, it's in the area of protecting your margin or protecting your profitability. With Mortgage Coach, we see anywhere from 10 to 20 to 30 bips more profitability in Mortgage Coach loan originators versus those loan originators that don't use Mortgage Coach. This is the experience, right? So I'll break it down. I showed you on my first slide, but let's break it down a little bit. So I mentioned that human level or that human component sitting on top of technology. Well, first of all, there's the loan originator branding. And as importantly, there is Truist branding. So where you see this ABC mortgage, that would be your brand front and center. Now, the beauty of that from a marketing standpoint, Greg, is that this presentation can be shared. So when John and Susie, first-time homebuyer, are working and they're helping to get, or they're having mom and dad provide gift funds, or they want to share the experience that they had with your loan originator with a friend or family who's looking to use or that needs a mortgage, this application can be shared. And what that does to lift your brand with no additional investment in marketing dollars to generate leads, that's another golden area of opportunity to get an ROI off of your marketing system. And then you can see the breakdown in options. So there's very detailed information about what makes up the option. We do have the ability with an integration with experience.com to build in borrower reviews to see your net promoter scores go up without having to go dig through, Yelp and Google and things like that. There's this thing called alerts, which I mentioned just a moment ago, that when the presentation is opened or shared, the borrower or the loan originator receives an alert. And that alert happens, it makes the phone beep and buzz, and it's either shows up in some kind of an email for the loan originator or right in their advice engine. But the call to action when that alert happens is for them to pick up the phone and engage with the borrower, so that the faster they can respond to the borrower with points of education or concern or changes, it's a big way to reduce fallout in your lead generation. And then there are charts and graphs. So all this data is one thing, but to turn this into charts and graphs that really make a visual statement or illustration as to how these loan options how they compare over time or on a monthly basis, on a short-term basis, over a long-term basis, that's extremely powerful and helps drive a very educational experience for the borrower and one they understand. And then finally is video. Again, as I mentioned, as we move into this next wave of digitalization, the ability to add human touch on top of that. With every presentation, the loan originator can add a customized video that walks them through the benefits or the pros and cons of each one of those options, so that long after the Zoom meeting ends and the borrower is back in their own home on their sofa at night, rethinking what you presented to them, this video narration that the loan originator added is there at the click of a button for them to revisit and trying to for points of understanding.
So quick question. So is this something that's like sent out to the client, via like email, or is there like a link to a website or something like that? How does that work?
And I will definitely drop that into our presentation here in just a moment for you.
Okay.
Mortgage difference, again, I cannot stress everything that I'm reading as we move into 2022 is all about the digital experience, right? To be where the borrower is when the borrower's information on any device. And so you see here, Mortgage Coach is viewed on an iPhone, it's viewed in a web browser, on a smart device, either iOS or Android. So let's net it down. Options, every consumer wants options. If you're buying a car, you have different needs than I have. You might want a stick shift and I want automatic. I mean, we want options because when we have options, we buy into the decision. The next thing is to show, cost over time, because it's not just a transaction. It's how does this transaction work for you over your lifetime or the time that you have this home or this loan. And finally, strategies. This is such a powerful thing for a bank like Truist. When you have a mortgage transaction and you can leverage that transaction to have a conversation with the borrower on, for example, single mother who has not had the opportunity to invest in retirement. And you're doing a transaction for her, you're taking her from renting into buying, and you're saving her $400 a month. And oh, by the way, Susie, what if you just invested 200 of that savings into a retirement account with Truist? How much more value that would provide to you as you build equity over time and hope for and then support the cross sell of the channels of distribution within the banking environment at Truist.
Mm-hmm.
Okay, these are just a few of the examples. Any type of borrower scenario, whatever the borrower is trying to achieve, you can construct a loan strategy in Mortgage Coach. So this is just a few of the examples. And then, as I mentioned, from a marketing standpoint, Mortgage Coach can be used from a lead generation standpoint. So Greg, let's say you have a campaign that you are pushing out on trying to attract the millennials that are depositors of Truist, and you want to drive home ownership for those millennials, first-time home buyers. Instead of just sending that pretty glossy asset of a new family getting the keys to the home and with smiling faces and boxes, you could add a sample total cost analysis that actually shows typical rents in your area, typical home prices, list prices, and then different loan options that might reflect a 3%, a 5%, or an MI option for how that millennial might be able to afford homes at different price points. That is far more value to that person that's receiving that content over just saying, hey, we do home loans for first-time home buyers. It could be you're targeting older clients and you're trying to get to, do some type of a HELOC or a move up analysis. So those are the types of things that we do with the marketing platform that you have. And then obviously during the transaction, and then post-close, we leverage wherever the system of record is for your past client loans. Will that be Salesforce or some other system?
I'm sorry, what was that?
Yeah, the system of record for closed loans.
Oh, so yeah, that information will be in Salesforce as well. Yeah, of the prior clients that have closed with the loan officer.
Okay, all right, so fantastic. So in that particular case, we could launch an annual mortgage review program where on the anniversary of the loan or any other business rules that you want to set within Salesforce, like the market's moving up, the market's moving down, you can customize content, add an example of let's say, for example, an example of cost of waiting, right? So interest rates are going to go up next year. Home prices are continuing to go up in appreciation. What would it do to get you to move now versus later? So that's how Mortgage Coach can be used from lead generation all the way through the transaction and then post-close. And then the other thing that we could do is with your depositor database, whether it's statements that you push out, whether it's advertising in teller lobbies, what have you, you can also promote the use of ask me for a total cost analysis, leverage your depositor base to also sell and try to drive leads from your depositor base. I'm going to stop there and ask what questions that you have at this point.
Hey, Dawn, I know we had, and I apologize, I have a bad memory, so I'm going to just apologize on the front end. We had talked about sort of the connectivity of systems like product and pricing engine into this and Salesforce, how that data, like you just described, if you put some sort of, hey, if rates move here, we want to look at all these booked clients out of Salesforce, and how do we connect to Mortgage Coach so that we can automatically create those total cost analysis. So I guess if you could speak to just because I have my compliance hat on, which is how does like interest rates and product information make its way into Mortgage Coach so that the loan officer is not just fat fingering something in and the client thinks it's a loan estimate, and it's really more just an upfront, product comparison with all the extra value of the cost saves over time. And if you do this, here's your sort of options and the value you get out of those options over time. But it's that connectivity between product and pricing, or connectivity with Salesforce, or just automation of the data flow between, our systems and into Mortgage Coach. That I'd like to hear a little more about how that works.
Okay, for sure. Today we have what we call out-of-the-box integrations. Companies like Total Expert is a CRM. Top of Mind Surefire is a CRM. We have out-of-the-box integrations with several CRM systems. Native Salesforce, we do not have today. We have integrations with a company called Jungo. They are a CRM that sits on top of Salesforce. So in case of your instance of Salesforce, there would be, what you would do is we would work with you and your development team. We have some very simple APIs where we could pull and push data to and from Salesforce. So that's part of it. The next thing is, I don't see that we have documented in our CRM what your pricing engine is.
It's our own internal pricing engine, which there's a longer term project around replacing that, but that's not going to happen soon.
Okay, so we would, if your product and pricing engine supports API integration, we would do the same thing there. It would be a custom build that would be a joint effort between Truist and Mortgage Coach.
And is that how it's typically set up with the other clients? Is there some sort of either out of the box integration that already exists, or there's a development to integrate between product and pricing in CRMs that other clients are using?
So let me show you an example of our Optimal Blue integration, which would reflect something similar to what you would do. Okay.
Okay.
Hold on, let me launch OB for just a minute. All right, let me grab my share again. But this would be an example of what we would do. When we, a lot of times, Mike and Greg, when we have large banks like you guys, we do custom development because you have your own systems, your own workflows. I mean, that's your value add, right? You're specific, the way you do things, that you have the ability to customize what you do and how do you go to market. A lot of independent mortgage banks that are smaller, they just buy off the shelf, right? They'll buy a point of sale system, they'll buy, they'll have Encompass, which we integrate with, or things like experience.com for reviews. So those are all out of the box. Larger companies, I will say, like for Guaranteed Rate, we have a custom integration project going on. They have a very unique fee system. We used our APIs, we're integrating with them. So it's not uncommon for large companies like yours that we do take our APIs and we do custom integrations. So let me go ahead and share my screen. This would be an example of how we would integrate with your product and pricing engine. This is the Optimal Blue user interface, and I'm going to grab a loan from my pipeline. There are certain data elements that are required to drive a valid product and pricing pull from Optimal Blue. So I'm grabbing this particular client. I've already filled out the loan information that I gathered in that hopes and dreams and goals conversation with the borrower, all the data that's requisite to get a pull from Optimal Blue. So all of their data elements that are required, I click submit. And now what happens, the Optimal Blue product and pricing engine is going to compile all of the product options or pricing options that would be available or eligible for this borrower. So you can see here, I've got my my list of all different types of products and pricing. And there is also embedded a Mortgage Coach button and a Mortgage Coach column where I can select up to 4 different product options that I think will fit that borrower profile and what they're trying to achieve with home ownership. I can even drive in and say, you know what, I really want to leverage, I want to leverage something above or below par for lender credits or rebates or what have you. So I'm going to select something. Let me see, I'll do a big discount point here. And then I click Mortgage Coach. This is where the magic happens of the API integration. So we take that data, your pricing engine would gather that data. In this case, we present the loan originator with a screen where they can modify the names, because a lot of times you don't want them to see who the investor might be, or you might just want to make it user friendly. And then when the loan originator clicks launch Mortgage Coach, all that product and pricing data is now being sent to create the total cost analysis. So I just selected products, and you can see here, when the presentation returns to me, it allows me to now add a video. And it either will trigger my phone so that I can leverage the nice cameras that are on my phone, or it will open a web browser, or if I didn't, if I'm having a bad hair day, I could do audio only. But all of that to add that customization for the experience that the borrower will receive. So now this is the presentation in my hands. I'm the loan originator. I'm still controlling it. And so, Greg, to address your question, now I want to share the presentation with the borrower. We generate a link, and I simply copy and paste this link. It can be texted, It can be emailed. You can see here, you could use it if it's a marketing presentation. It could be used in social channels. Or just, simply email. But I'm going to copy this presentation link and I'm going to drop it into our chat, and you'll be able to experience Mortgage Coach now, like the borrower that I want to get on the phone and start unpacking this presentation with. All right, so if you can click that link, it will take you to the borrower view of the presentation.
Mhm.
Okay, so now what happens is I see that you've clicked the link, and you know that I know that you've clicked it because this views up here just changed to 3. So I'm assuming Chris and and Mike and Greg, you guys have clicked it. All right. So now I'm driving the presentation. This is real time highlighting and real time updating that happens at the speed of light, right? So I put together these 3 presentations. Let me just click this off a moment, or 3 or 4 options for you. And I want to walk through, Greg, what I put together for you. So you see that you told me you have a purchase price of about $150,000. So I've used that price point for all of these different options. But you can see here, my interest rate changes from anywhere on the 15-year option at 2.25, all the way up to a 30-year where I have 3.75, 3 1/8. And oh, by the way, that's not just the only thing that we should look at here, because you can see the payment on this low one is here, and this 31, and this one, and this one, and what's happening on your side. And it should be highlighting on your side. Is that happening? Okay. So
Yeah, I haven't. So Dawn, I'm sorry. Where was that link again?
it's in our
To be able to
chat.
get to the,
It's in the chat.
I got you. Got it. All right. I apologize.
So I can take that off, and let's say I wanted to focus on, let's say that you were very, very focused on what the savings were going to be in each one of these, or you're focused on the cash to close. You can see that the cash to close in each one of these isn't a whole lot difference, but when you turn to the opposite side of the presentation, you can see the difference in how these particular options build wealth over time. So you can see the difference in the payments in the graph at the top, right? So a little bit of difference there. You see the savings over 60 months. So obviously that 15-year provides a lot more savings. But then you also see that comparison of interest over 15 years of what you're going to pay. Or if I wanted to focus on how much equity I was building, I would change the benchmark view of this particular graph and chart. And you also have the ability to look at more info, because inevitably you're going to have a discussion of, well, what is that payment made of? I don't understand that. So the guy down the street quoted me this, and this was the payment. So you're going to help the borrower walk through the differences of what makes up that payment. Then you're going to jump into the closing cost again and do what's the difference in my closing cost. And then for any specific product, you can drive into the actual fees associated with this particular product. And then again, I mentioned, because you're a bank, and not just because you're a bank, you can do this with any LO can do this, but this is the power of, for example, having the conversation with the borrower. The bank may be having a promotion on a money market account, or it might be having a promotion on an IRA Roth account or something like that. So you can take savings from a refi. You can show the borrower that if you were doing a purchase transaction and they were renting and they put part of the savings into some kind of an investment vehicle, now you become the true advisor. Not a true financial advisor as you think of all of the certifications that are required, but actually just beginning the conversation and helping the borrower understand that you're interested in their ability to build wealth or reduce debt with a mortgage transaction over time.
Mhm.
Okay, so when you open the presentation, you probably saw the disclosures. So that's another way that we sort of even the playing field for all of your originators across the bank footprint, ensuring that they're compliant. And also because you're a bank, we help, making sure that you are hitting your CRA requirements and also fair lending requirements. So if a borrower, Mr. and Mrs. Smith, get a presentation like this, we really believe that Mr. and Mrs. Rodriguez should get a presentation like this. So really leveling the playing field to ensure your fair lending and your compliance.
Yeah, speaking of that, so just, having some experience with like lead aggregators and like rate table advertising, and all that good stuff there, when you provide a quote to a client, aren't there some disclosures that need to go along with that, or one-click guidance or something like that? I'm not sure if that's handled anywhere.
Yes,
Or we need.
if you read that disclosure language that's we present to you, it's your disclosure language, but it also stresses the point that this is not a loan estimate. So we avoid triggers that will trigger the need for loan estimate to be set.
Right. Okay.
I'm sorry, I finally got the link to work. It was launching in, I think it was launching in Explorer, which it wasn't working there. I had to move over to Chrome.
Okay.
I think I really like it because the value is it's a different way to present the loan comparisons with additional value of easier to follow for the client, customizable with the videos or an audio where you can have just an audio of, hey, Mr. Jones, here's the comparison we talked about. Just real quick, let me call out these couple things just so you're clear. I like the idea that there's that alert, right? So you can reach out to the client as soon as stalk them a little bit, right? But as soon as they open it up, hey, you can ping them with the text or call them and say, willing to walk you through this and if you have any questions. And then you have obviously the comparison of how visually the differences in payments and savings, as well as the opportunity to talk about, well, what could you do with that money that you're saving? Let me just, show you some ideas of just plug some numbers in with investments over time, to show that value and hopefully open the opportunity for the conversation around Truist products for a cross-sell opportunity, right? For more information. So, I really like it. I see the value in a different way to present and a different way for our loan officers maybe to think about presenting those loan scenarios and loan comparisons. I think the biggest challenge is going to be the integration piece. I know there's some customizable work between product and pricing engine, and then anything around Salesforce for like pulling that information. At a minimum, it has to be connected to the product and pricing engine to make this thing work. But then have probably some other functionality we like connecting to Salesforce to pull some of that client information over. Or like you had described on, if we wanted to set sort of like a campaign sort of thing, hey, when these sorts of things happen, we want these to automatically launch or be available to the loan officer, that kind of thing.
Yes.
So I think that's probably the biggest hurdle, which I'm sure is the biggest hurdle with a lot of companies is the time and investment to make that connectivity. I think in our case, it's a bigger challenge, and Greg can attest to this. We have a lot of technology resources deploying into post-migration work into next year. So this becomes sort of how do we assess this to really business case it out to say, hey, this makes sense. We would get this adoption and usage with it, and then make the case to kind of get it into priority for those technology resources to be able to work on this. And not knowing how hard that integration is or how much time or effort, it's just, that's sort of, I think, the work that we'd have to start sizing out and thinking about how do we go about, really assessing the interest, doing the business casing, and then get an understanding of like, what would this really take to do? And then there needs to be sort of a priority conversation around, okay, how would we squeeze this in, if you will, or add this to the plate ahead of something else? So that's the biggest challenge. And unfortunately, it's frustrating because we have to, I mean, I'm interested in anything that makes sense that we can help drive business. I think this definitely is, this may not work for every loan officer, but I know there's a lot of loan officers that'll be interested in this. But we have the constraints of our technology resources that are spread across a lot of initiatives that we've got to figure out how to size this against all the other stuff we've got going on outside of, mortgage even.
Right, right. So one of the things that I can say is it's the technology integration with Mortgage Coach is very simple. It's an exercise in mapping, right? But it's also
Mhm.
probably the mapping that your technology team already has. So we do a lot of that lifting there. I would definitely suggest that we have a conversation with your technology team, and that we get this in front of them. But you're not unlike Flagstar. Flagstar is revamping their entire technology stack. And they start with, the obvious things like you have to, they're building a new LOS. They're bringing up a new CRM. They're all of the things that you think of like the have tos. But what struck them is that the one thing that the loan originator does day in, day out is they are quoting rates and fees and total cost of ownership. And it is that critical juncture that they realized they were missing the technology piece to make this really effective. I mean, you can do all the other have-to systems that you want, but if you're in a state where you're bringing up new platforms, that is actually the perfect time to integrate Mortgage Coach into the product plan or the roadmap, because it's not a heavy lift at all.
Yeah, and that's exactly why I wanted Greg to kind of jump in on this, because you make up a great point there. We're going through that exercise right now with this sort of big marketing platform transition and bringing on sort of enterprise Truist capabilities, and what does that look like and what will that solve for us, and how do we bring that on for mortgage. And this could, we're trying to get the menu put together, right, and understand how do we prioritize that menu. So this is, it's good timing for us to be talking about this. Is okay, how do we size this out in value/business case against technology? Like, what would we get out versus how we'd have to prioritize it? And I do think we need to have at some point a conversation with somebody from our side and your side on sort of the integration, just to sort of map that out a little bit, so they can tell us, hey, this is just assuming we have resources deployed to it. How do we think, how much work effort would this really be? Just so we have a sense from our side, hey, okay, this is doable. Now it's more of, but we have limited resources. How do we prioritize it? Right.
Yep, absolutely. Another thing, I'll go back to Flagstar. We actually put together, they had the diagram of how their systems were going to be integrating. And we worked with them on the automation points that we could build into their new technology environment. So we partner with some of the workflow design, the system design, the system integration design. And then the other thing is we do it with the mind that, you mentioned adoption a couple of times. If it's done right, when you build the total cost analysis into the marketing efforts and that lead generation is of utmost importance and significance to the loan originator going into 2022, and you can help drive leads to him, that drives.
Oh yeah.
Yep. Yeah. Do you guys, speaking of business case, do you guys have any data on, just like efficiencies or efficiency gains or conversion rates, or, just the lift that this would provide to us, based on experience, similar implementations?
Absolutely. So for every lender that we work with, we do an ROI, and it's based upon information specific to your organization. But from a blanket statement, we often we have a lot of LOs that will quote 30% more conversion, 33% more conversion. As I mentioned in the slide, profitability increase of 20 to 30 bips. When you generate leads or when you work the automated annual mortgage review, you could get anywhere from 3 to 5% new leads, opportunities out of your database, your past client database. So absolutely, there are examples of benefits and pull through, benefits and profitability, and generating new leads.
Yeah.
Hey, Mike, I wanted to be careful of the time. I know you guys have another call in a couple minutes. Next steps. So, I think a lot of this is going to have to do with the integrations and the technology portion. Do you want me to get in touch with you and try to set up a call between your team and our team to discuss that?
Yeah, I think so. I think we need to set that up. It might have to be after the new year.
Sure.
In the meantime, I want to start socializing this more to some of our sales leaders and loan officers, so I can understand their knowledge of Mortgage Coach, their interest in Mortgage Coach. I know Rebecca's already a big proponent, and there's some loan officers that I'm aware of that are very interested.
Yeah.
But I do think we need to have that conversation with our tech partners just to talk through that and get an estimate. And then any cost estimates that you guys can provide would be helpful too, as we're talking about, business casing this thing out, as I'm understanding, how many loan officers would it be platform wide for everybody, or would we go down a path of licenses kind of thing, limited licenses to start sort of process. So, but any cost that we can, knowing it's still, not knowing exactly how we deploy it yet, but just estimates would help us with that.
Sure. Okay. Yeah, we can get that for you. John, you've got a lot on your plate as far as some pricing for them. What do you think is a good timetable?
Maybe by next Monday.
Oh, that's fine. I mean, yeah, that's fine. I'm not in a
We'll
gotta
say
have
Tuesday.
it. So
We'll add it for you. We'll say Tuesday.
And
I know we're gonna be challenged with vacations coming up around the holidays with everybody. So
yeah, we're standing up a new website, and I've got a lot of content I've got to be writing and stuff like that. So I do have to drop, but it was a pleasure. I really look forward to moving on to the next step with you too.